Crypto presents exciting new opportunities for the investment-minded, but it's also volatile and accelerating in complexity. That's why we created Token Metrics, an intelligent crypto platform backed by an industry-leading combination of data, AI, and media that feeds optimized portfolios to crypto investors. Featuring Token Metrics ratings to help you find the best investment opportunities in real time, an Indices page that showcases various model portfolios, and deep insights into price predictions and technical analysis. Plus, with access to Token Metrics TV, monitor 24/7 exclusive crypto news and analysis. Whether you're a first-time trader or a seasoned crypto investor, you can stay informed and in control, backed by your all-in-one crypto companion, Token Metrics. Take control of crypto today at Token Metrics.
We are live. Welcome to the market update. I'm your host, Bill Noble. If you need a roadmap in crypto and you need to make money in crypto between now and the end of September, subscribe to this channel. Turn on alerts so you know when we're going live. And if you like the content, which you will today, please drop a like. We're trying to break our record of 2,000 likes. This show is brought to you by tokenmetrics.com, a preeminent crypto research site and analytics firm that will help you, especially during times like this. All right. Today, I'm going to be joined by Simon Dixon from Bank to the Future. Simon, are you out there?
I'm here. Thanks for having me.
All right. Great to have you on the show. So today, we're going to start off with something special. We're going to talk about perhaps, why Celsius had problems, like they had $1 billion hole in their balance sheet, how that happened. Then we're going to talk about what the future holds, like with the Celsius bankruptcy. And I'm going to be particularly interested in where the Celsius assets are now. So it's what happened, what's happening now, and then what the future hold and what that could mean for market direction. So Simon, why don't I start by letting you introduce yourself, the firm you work at, and then just tell us why you're doing this speaking tour of all things Celsius.
Yeah, sure. So my name's Simon Dixon. I've been around since Bitcoin from the beginning. I spoke at the first Bitcoin conference in the world. I wrote the first published book in the world to include Bitcoin. And I'm a shareholder in over 100 companies from Coinbase, Kraken, Bitstamp, Bitfinex, Circle, Ripple Labs, and banktothefuture.com is an online investment platform that allows investors to buy shares in the largest companies in Bitcoin. And so before Bitcoin, I was a monetary reformer, and I've seen every cycle, been involved in every cycle, purchased my first Bitcoin at $3, and have been involved in the industry ever since. One of the companies that I invested into was shares in the Celsius network. And as a shareholder and one of their very top depositors, I found myself in this position where the industry needed a voice for the depositors. And in order to protect my interest and my deposits, and as one of the top account holders, and also the shareholders, I recently came out as I started to get increasingly more concerned after withdrawals were suspended around what's happening with Celsius.
Okay, so let's start with this. How did they get $1 billion hole in their balance sheet? Novogratz from Galaxy is on the tape today talking about the horrendous risk management in crypto that led to this debacle. I mean, was it the staked ETH relationship? I mean, do you know how they wound up with this problem?
Yeah, so the issues that we're trying to solve with Celsius right now are threefold. Firstly, it comes down to leadership. So the leadership of the company, Alex Mashinsky, it turns out has completely misrepresented a lot of people, and used techniques that were very dubious as we started to investigate that. The second one is risk management. And so by having a token involved in this business, it created a massive problem where the whole community were demanding utility for that token, which led to them essentially misrepresenting the strength of the company's balance sheet, where they said they had it's guaranteed. For one, you can't guarantee it. And two, they were saying that it's as safe as a savings account, which it's not. It's a high-risk hedge fund. And three, the representations, the business model deviated from what it originally was. So it was originally a peer-to-peer lending platform whereby someone that had Bitcoin and wanted to pull out some dollars could put it up as collateral and pull out a dollar loan. On the flip side, somebody else that wanted to receive interest on their Bitcoin could lock it up, receive some yield, and that was meant to be put together peer-to-peer. But it turned out over time that the company grew so fast that it deviated from that model, started putting everything in DeFi contracts, started putting it in mining, and that made it a security and a fund. And then as funds started to disappear, and large companies were receiving under-collateralized loans while retail were receiving over-collateralized loans, it changed the risk profile into essentially a fractional reserve bank. Right. So that completely changed the risk model of what people were investing in, and that was never disclosed. And so because the leadership was not appropriate for running a financial services company, rather than disclosing that whole, which is what you're meant to do, he tried to get more and more people to invest. That led to accusations from regulators that it was an illegal securities business, potentially an illegal bank. And then the regulator just came out and said it was a Ponzi scheme as well, as an accusation. And finally, the third is regulations. So when you're operating companies like this, if you are a peer-to-peer model, then you just need to disclose, the peer-to-peer model. If you're a securities business, then it completely changes the regulatory environment. You have to have transparency, disclosures, suitability tests for investors, all the things that provide investor protections. And if you're a bank, you need a banking license, and you need stress tests, insurance, and all the various other things that a bank needs to go through from all of the lessons that we've learned over the last century in what can happen when you don't have those types of protections in a bank. So those are the three reasons why it's got to this position: bad management, regulation, just illegal licensing, and a risk model that just went to ever increasing risk in order to make up for a hole. And rather than disclosing it, the leadership rolling that over into what feels very Ponzi-like.
Well, excellent explanation, right? So in other words, this very telling where you said, they sold it like it was a neighborhood commercial bank where you could deposit money, but really what it was a high-risk hedge fund. So undoubtedly, Celsius depositors, you among them, are no doubt asking the question. Like, one question I have is, it seems like they paid back a lot of DeFi protocols. And then, of course, there's the question of, we can develop it throughout the conversation, but, are Celsius depositors ever going to see any money, right? Is it going to be what they call a bail-in, where you get 60 or 10 cents on the dollar? So let's start with the DeFi angle. Did they pay the DeFi protocols like AAVE back before they blew up, and why? Do you know anything about that?
So when Celsius started to, I believe that the board knew there was a hole, and rather than disclosing it, they tried to trade their way out of it, which can work in a bull market, but you're meant to disclose that. So what was happening is when withdrawals were suspended, I started to put some time into what was happening here, and I started to call it out that it's not illiquidity. So the difference between insolvency and illiquidity is that if, for example, you have some money in STETH, which is ETH that allows you to stake it while Ethereum is moving from proof of work to proof of stake, and that started to depeg, you start to make a loss if you ever need to pull out the ETH. And because it depegged, that caused an issue where if someone needed to withdraw their ETH and you needed to reverse that contract, then illiquidity means that you just don't have access to that, but it will be ETH in the future. I started to call it out as insolvency, and then everybody started to hate me and call me FUD because I was explaining to people that I believe that there is a hole and this will move into Chapter 11 bankruptcy. Throughout that whole thing, that led to lots of accusations and people claiming it was FUD. So what I was trying to explain to people is that because Celsius is now in this position, it needs to pay down all of these smart contracts and these debts so that it could get itself in a position where it could disclose the size of a hole and then move into Chapter 11 bankruptcy, which turned out is exactly what happened. And when it did happen, people were quite shocked because everyone was still holding on. There's also another part to this, which is the CEL token. The CEL token in this model is extremely problematic. So if you look at, for example, what happened with Luna, the issue with Luna is that they built a algorithmic stablecoin, and rather than backing it by dollars in a bank, and the advantage of that is that if it ever depegs and moves away from the dollar peg, then you can pull the dollars out. When it's algorithmic, if it depegs, then you have to look at the collateral behind it. And the UST Terra stablecoin was backed by a shitcoin, essentially, that was not as liquid as it needs to be. And if that coin crashes, then you have a really big liquidity issue and potentially insolvency. And then they had to sell all the Bitcoin, and that then led to it being worth zero and wiping out a bunch of hedge funds that were betting on it. And then a bunch of lending companies were giving unsecured loans against that hedge fund. And then we had our Lehman Brothers of crypto moment, where we realized that there's all these financial institutions that were systemically tied to each other. And then we've also got the token side. So with Celsius, there was cases where they were guaranteeing the balance sheet, saying they had a $2 billion balance sheet, but that was a token that was deeply illiquid that you could never sell. And they were allowing people to deposit their CEL token on their account and then borrow dollars against the CEL token. Now, if you're over collateralizing with a very illiquid asset, then if you need to sell that in a rush, you can't sell it because the liquidity doesn't exist. But people were borrowing dollars in order to buy more CEL token and then speculate on their CEL. And they were receiving all of their interest in CEL because it was incentivized, where essentially they ended up with their entire life savings tied to this hugely speculative, illiquid asset. And as soon as withdrawals were suspended, it turns out that 93% of those tokens are locked up in the app. And the value of that token has completely plummeted. And the only thing keeping the value of that token is that all the tokens are locked up in the application. So it's just incredibly bad risk management, and really using illiquid, highly speculative assets in order to prop up a model that is where we are right now.
So Celsius actually had their own token on their balance sheet as one of their primary assets. And then people were borrowing against their own CEL tokens, etc. So they were sort of betting on an ongoing appreciation of the token in addition to all the other speculative things they were doing.
Yeah, and then they were putting buy walls in order to increase the price of the CEL token. And then the board were doing OTC trades, selling their CEL token while simultaneously encouraging people to buy it as the market was being manipulated on the way up.
Right, because one of the things we talked about on the show was, there's something out there and we don't know what it is. Turned out to be Celsius. And because I have a history at Wall Street and I saw Lehman and a lot of other things before that, I called it men behaving badly, right? I didn't quite know it was this badly. So we appreciate you coming on the show to talk about this. All right, now that Chapter 11 has occurred, I understand Celsius has got like a lot of wrapped Bitcoin, there are a lot of assets that they hold. Like, are those assets, is it called receivership? I mean, the assets weren't dumped on the market, right? The liquid ones. So where are Celsius assets right now? Do you know?
Yeah, so the first exercise was to get ready for filing. If you're insolvent, then you have to file bankruptcy. Immediately, they tried not to file bankruptcy and see if they could trade their way out of it. When it became apparent that there was no alternative, they started to get the assets ready for bankruptcy. Now, the problem here is that the CEO of the company went around on all the different YouTube channels telling people everything was fine. And so when they told everyone that it was fine, a lot of people did not withdraw their funds, believing the words of the CEO. So knowing that all was not fine, was going around on all the different channels, took a lot of YouTube influencers' reputation down as well. So, the CEO was doing deeply unethical activities that led to people leaving their money in sell while other people withdrew. In the Chapter 11 bankruptcy, the lawyers essentially take over, and it's a crime to lie about anything in bankruptcy. And so at that stage, you have to disclose everything. So a lot of these activities that I was speculating on, that people were calling FUD, started to get disclosed, and then it was a lot worse than some of the things that I was reporting. And so what happens there is they started to get everything ready so that they could release a balance sheet and then disclose that there's approximately $1.2 billion missing. There's a couple of things on that, though, that mean that it's a worse hole. They put a value for the Cell token as $600 million. The market price and the market cap is not even that. So, and if you release those tokens and opened withdrawals, then you'd have immediately sell pressure that would take that token to zero or thereabouts, just like the Luna token. So that asset is another 600 million that would make a bigger hole. Also, they bought a mining operation for $200 million that they say is worth 720 million. And so there's a potential another, $500 million there. So all in all, and it's a moving target, remember, because they're marking everything in dollars when these are crypto assets and crypto asset value changes. So we estimate that there's an approximate $2 billion hole to make up. Where are those assets right now? Well, it's held. The Celsius management team is still in control. What happens with Chapter 11 is you buy a grace period from lawsuits. All the lawsuits have been filing in and coming through, but you get a grace period to restructure and reorganize the company. And either you end up where you liquidate all of those assets, which would crash the market and create the next phase of cascading liquidations and expose other companies and miners and various other things and exchanges, or you can do a reorganization. And so that's where it is right now. At this stage, they have to answer to the trustee, and a committee is formed of those that they owe the most amount of money to. As a top depositor, I'm able to apply to be a committee member. And then they essentially have to answer to committee members. The courts has to sign off on any plan of reorganization, and then they can either reopen the company under some reorganization plan, or they have to liquidate all the assets, depending on the outcome of that.
All right, so really interesting. So one of the things we were talking about on the show was kind of like a parallel between what was going on at the moment and 1929 and even 2008, when Kramer said Lehman was fine 2 days before it went bankrupt. The warning was, when everybody's telling you everything is all right, it's not. And then when everybody's telling you the sky is falling, okay, that's when you go the other way. So question on trading. Now, when you said they tried to trade their way out of it, I know they played this game where they showed their wrapped Bitcoin liquidation price. First it was 16, 13, and then it was 3. Was that them trying to manipulate the market by putting wrapped Bitcoin into a wallet to show that they had enough collateral? Like, was that what you meant by trading the way out of it, or was that just a different scheme?
No, I believe at this stage they recognized that they had to move into some kind of Chapter 11, and so they have to move assets and try and protect those assets to the best of their abilities. At this stage, it was like, which crime is worse? And so taking, client assets and using it as collateral in order to try and maximize the end result for those so they can disclose the whole led to them having to make lots of different moves. You say it was parallel to 1929. I'd actually say it was more in parallel to 1907. The 1907 panic was when there was no Federal Reserve, and there are lots of banks that were suffering liquidity issues due to runs on bank because they were trying to corner the copper market, and that failed, and banks were lending lots of money to the company that was trying to corner the copper market. So what essentially ended up happening is JP Morgan, as there was no Federal Reserve, lent lots of money to these distressed banks, and in exchange for the loan, bought them up for pennies on the dollar. And when you bought that is essentially what FTX did. FTX came along and said, hey, BlockFi, you're suffering a liquidity issue. We'll lend some money to you, and then we're going to buy you a $4 billion company for $25 million. And so FTX played the role of JP Morgan. And then in 1907, JP Morgan was part of the meeting or representatives in Jekyll Island that set up the Federal Reserve to create the lender of last resort facilities with a group of private banks in order to stabilize the system. So something similar will probably happen where a group of DeFi contracts or a group of entities will put together some kind of future model. But there's lots of parallels. At the same time, companies went completely bankrupt, like 3 Arrows Capital. Celsius moved, and Voyager moved into a reorg. And at the moment, we're looking to put together a bail-in package as opposed to a bailout, where we can put those through a reorg and do the model properly.
All right. Well, love the 1907 analogy. So, quick question. So, is it possible to set up like a crypto Fed, like with all the big DeFi players getting together and creating some sort of emergency pool in a decentralized fashion? I mean, is that because in research you get paid for imagination. I know a lot of people are like the Uniswap and Sushi, and a lot of these tokens started rallying. They were the first ones to start rallying, assuming they were benefiting because people didn't want to hold stuff on centralized exchanges. So on this idea of the crypto Fed, I mean, can DeFi protocols literally get together and create a decentralized lender of last resort?
Well, totally, and I'm sure something like that and initiatives will come through. From the 1907, it took 3 years, and then another 3 years. So 6 years later, you had the Federal Reserve. A Federal Reserve implemented by smart contracts through voluntary free market participation is something that's possible with this technology, with a little bit of thought and imagination. But in this one, it's not going to be the solution. What we're working on right now is a bail-in package. And by a bail-in, we're looking at fixing the three issues, which is leadership. The existing leadership has to go. The reason for that is because this model is regulated as a securities business and a lending institution at Bank to the Future and a syndicate of companies that we've been working through. We have all those licenses. We're the longest standing company in Bitcoin, and we're the world's first regulated securities business. So what we're looking at is saying, well, what can we fix? Well, you've got those three issues. Leadership. We have a team that's already authorized and regulated through the companies in our group. Then you have risk management. We're saying, well, what's the lessons that you've learned? Well, we learned from Luna that when you have a stable coin that's backed by algorithm and tokens, it's totally not pristine collateral. So if you're going to use stable coins, it has to be dollar backed. And the only thing that is pristine collateral in our market is digital hard sound money, which is Bitcoin. And so what we're looking at doing is completely changing the risk model, whereby the only collateral would be Bitcoin and dollar-backed stable coins. And then the third thing we're doing is looking at the licenses and regulations, which we already have. If you put all of that together, then you have the opportunity to pitch to the courts and to the committee in Chapter 11 that we have a viable plan. And the plan would be as follows. Celsius has lost your money. There's no way around that. But we're used to recovery plans. We did in 2016, I've been involved in two. So we had the disaster recovery of 2013 with Mt. Gox. That was done via Kraken, a company I'm a shareholder in. And we did the same for Bitfinex in 2016 when 119,000 Bitcoins were hacked. We put together a bail-in recovery plan. And we look to do the same with a roll-up of these different companies in the industry and make all of the creditors shareholders in the company. So you would have, the money's missing, what's left? Well, let's pay that out. Can we encourage the model to continue? Well, that requires trust, leadership, and a new risk management model. And then finally, how do you make up for the whole? The same way we did with Bitfinex, you allow people to be shareholders, and by becoming shareholders, you get the upside in a future recovery plan.
Okay, so for Celsius depositors who are no doubt, sitting on the edge of their seat, let me just recap that. So if you deposited your money in Celsius, you're not getting it back. What you're going to get is equity in a reorganized Celsius, or it'll be under a new name, obviously. And it'll be basically a regulated crypto lending institution, sort of revolving around Bitcoin and dollar stable coins as the way it does business. Is that accurate?
Well, not quite accurate, but that would be one of our proposals, but not quite. So the situation that is happening right now is that Celsius are going to make an offer. This is their proposal to the court. They're going to make an offer saying, take this money and run, which will probably be a 50% haircut. It may be even less based upon what is left. They're also looking at a plan where Bitcoin mining allows people to keep their crypto, stay long crypto. I don't believe it's a viable plan, but it's what they'll pitch to the court. And then we'll put together a competing plan, and other people can also put together competing plans. And that will be not just the bail-in. The bail-in is just a way of making up for the difference. So if, for example, Celsius say it's a 50% haircut, you'll still get 50% of your funds back once Celsius has disclosed their position. So you've got 50% of your funds back. There'll be an incentive to keep those funds under the reorged company that's solved the issue, or just take those funds and run, whichever you prefer. And then how do you make up the difference? Well, rather than people just losing the money, we'd look to put together and compensate through equity and bring everyone in as shareholders in the new company. Because what happened with Bitfinex when we did it for them, essentially you got equity at 30 cents that later traded on the Bank to the Future secondary market for $16. They then paid 2 years worth of profits out in dividends, which was hundreds of millions. And they gave you rights to the hacked token Bitcoin if they ever returned. And this year, $4 billion of those Bitcoin was recovered by the Department of Justice. So it was one of the most profitable investments that actually outperformed Bitcoin. It's very high risk. I'm not saying that can happen again. But that's the type of thing that we have done in the past, and it has happened. And if we can pull this off as a community and as an industry, I think we can rewrite economics textbooks, tell the story again, and show the power of free market solutions that the industry can actually implement. And a very exciting time, and prevent that next stage of cascading liquidations.
Right. Well, that really is interesting. So back to 2008, one of the things that they said about that was, no financial executives went to jail over 2008. A lot of them got, golden parachute pay packages. How are these guys from Celsius not going to wind up in jail for fraud, right? In other words, who's going to come down on these guys from Celsius who ran the company? Is it going to be private sector litigation, regulators, both? I mean, do you have visibility on that?
All of the above. So as a shareholder, I've just been sent 13 lawsuits, documents that Celsius is disclosing to us as shareholders. So the lawsuits are coming through. They're protected in Chapter 11, but at the same time, if there are certain other crimes, then they can come after the directors. Then there will also be regulators. There was a plethora of regulators, state regulators, and the SEC that were engaged in conversations around the illegal activities of being an unlicensed securities business. So if it ever moves into reopen, that will always come through. So it has to be a compliant model moving forward. I don't wish bad upon anybody. I'm just currently focused on solutions. The law, the regulators, the Department of Justice will decide what happens there. All I can say is that if there is an opportunity for those that have essentially been misrepresented and entrusted their lifetime savings, and the stories are heartbreaking. Some of the messages that I've been getting from people that thought it was as safe as a bank, or equivalent of a bank, or safer, or
that it was FDIC insured, right? I mean, wasn't that part of the ruse that they were telling people they had insurance? Is that true?
I'm not aware of them saying that they had FDIC insurance, but I am aware of them saying that it's safer than a bank. It's guaranteed by their $2 billion balance sheet, and everything's over collateralized. So all of these are complete false and complete misrepresentations. And so law enforcement regulations, all I can say is that if investors do have an opportunity to make their money back, there tends to be less action than if investors lose a lot of money. So in that sense, the industry is, those at the boards that are still in charge right now, the bankruptcy courts, and us trying to put together a solution, are aligned in that sense. On the other sense, the team at Celsius have legal firms and individual representatives where the best solution may be take as little risk as possible, settle with as many people as possible. And so you've got all these conflicting parties. Then you've got the token holders and the equity holders and the creditors. And you just have a free-for-all and frenzy at the moment. And you're just trying to managing those different vested interests. And that tends to be what happens. And there's, as we saw with Luna, there was 40 billion plus 20 billion on the line in the stablecoin plus the token. Here at one stage, this was a $25 billion assets under administration is how it was represented. That now is being represented at approximately $5 billion. So, these are really big numbers, really serious things. And the council that we're working with, they worked on Lehman Brothers, they worked on, Mt. Gox, they worked on Madoff as well. So this is a serious case.
All right, so let's turn to philosophy if you want to, if you can. So is the crypto ecosystem better off with this in the rearview mirror? In other words, I've always said on the show that, the crypto market has a unique way of like effing itself, right? Like, there's NFTs and JPEGs that turn worthless. There was ICOs. Are we going to learn anything from this? Is the market better off? In other words, from a philosophical standpoint, do you have any view on that?
Yeah, so having been involved in every cycle from, my first crash was $30 to $3. And having been involved in every cycle ever since, we just repeat the same mistakes again. The same mistakes are that everyone forgets that securities laws exist. And so they take an assumption and then they stretch the barrier further and further and further in the name of financial innovation. And recognize that there's just this one constant, and that is that Bitcoin is digital hard sound money and is not a security. And then around that, you get all of this innovation and you push the barrier further. That creates the next pump market. That brings new people in that didn't understand the last cycle. All the previous people that understood the previous cycle start warning people, and everyone ignores those warnings, and then they have to lose all their money and you have a crash. And then Bitcoin becomes pristine collateral again. Then you enter into the next cycle where everyone says, hey, there's all these Bitcoin killers. Bitcoin is this, this crazy old thing. We've got the next bigger, brighter, shinier, better, cheaper, faster way of doing things. And then another thing comes along like Terra, where you create another central bank And then when the market goes down, you expose that central bank as just essentially you hoping that this individual and the monetary policy committee that you slapped a sticker on and called it decentralized, you start to realize that there is people that come after, and you go to the next regulatory cycle. I do believe that our next cycle will be securities. Everything just becomes securities. So then you have Bitcoin as digital hard sound money. You have this experiment in proof of stake called Ethereum. And then you have a lot of stuff that will just be securities that will come out of this. Then they would just have to follow certain regulatory regimes, and we'll enter into the next cycle. So philosophically, that tends to be where we go, which is the same cycle that happens in the traditional world. The only difference is that everything's built upon digital hard sound money in the crypto markets, and it moves faster. In the traditional markets, everything was built upon gold, and then they invented fiat currency as a receipt for gold, and then they leverage those fiat currencies and they create banks that leverages it up further. And then you enter into these 100-year cycles where most people don't remember that it ends up as gold as hard money and returns back to in these different renegotiations. Then you have really these different models that are happening on a global scale. So I'm involved at the sovereign level. We were working on the El Salvador Bitcoin bond and putting together a Bitcoin-backed bond. We did it for Iceland in 2014 when we created the first Bitcoin-backed bond backed by volcano mining. What you're experiencing right now is a country that says we're going to create financial innovation based upon Bitcoin. Another country says we're going to create central bank digital currencies. And then someone like FTX comes along to countries in Africa, for example, and says, oh, why don't you launch your own shitcoin? And so you have these three different experiments on the country level, which we've seen time and time again. The country that picks Bitcoin ends up with a freedom Austrian economics way of organizing economy. The one that picks a central bank digital currency transitions to a totalitarian, more communist way of organizing their economy. And the one that picks a shitcoin destroys the wealth of all their people, just like Britain did when they created the slave trade by destroying all of the gold supplies and silver supplies in Africa by deflating their currencies through a shitcoin that they created called AAVE. So you're seeing everything that played out in the traditional world is being played out in the crypto world, but the cycles tend to be 4 years around Bitcoin halving, as opposed to the multi-decade cycles that you see in the fiat currency world.
So for Bitcoin, can anybody create a Bitcoin yield curve? Because I always wondered, like, okay, I saw on a Bitcoin Maximalist podcast, they said, DeFi doesn't exist because we haven't built it on Bitcoin. So CeFi didn't work out. DeFi took its lumps. When is somebody going to start issuing debt in Bitcoin so they can build a Bitcoin yield curve? I mean, don't you need that for mainstream institutional adoption? Or, did I have too much coffee this morning? You know what I'm saying? Does that ring a bell?
Well, just look at the history of gold. Gold is digital hard sound money, and in order to get the benefits of gold, you have to pay a custody fee. Bitcoin can significantly reduce the custody fee. It can create auditability that doesn't exist within the gold markets, and you don't have to store it with a counterparty in order to safely store it. So, but if you want to get yield on it, then you have to take risk with that gold. So transferring ownership is a way of doing it. So if somebody wants to manage their Bitcoin stack and say, here's my amount in cold storage, I don't want to sell some of it, so I'm willing to take a percentage of it at risk and lend it in an over-collateralized manner to somebody that wants to borrow it in order to speculate or short Bitcoin. As long as you can do that in a transparent way, then the model is there. It was a good idea, and the innovation is now coming down the line where you can do that. And we're investing in companies, that are allowing for a lot more to happen on Bitcoin. So I do think, Bitcoin is a slow and steady, patient wins a race type of game. I do believe that, you will have that. These ideas will be reinvented. They'll be done in a compliant way. and they'll be done in decentralized ways as well. That is all to look forward to. So there's still many more cycles, a lot more to look forward to. We just got to get through what's going to be the bottom. And the bottom's going to be based upon the legal outcome of what happens in these Chapter 11s, and how low Bitcoin will go will be based upon those and the outcomes of those. So we're trying to make sure that we steady the market right now so that we can get on with building and investing in the companies that are going to build the next wave of innovation ready for the next cycle.
All right, sir. Simon Dixon, we appreciate you being on the show. Tell people where they can reach you and follow you.
Yeah, sure. So I'm giving real-time updates on Twitter. I've never spent so much time on Twitter, at Simon Dixon Twit, TWITT. I'm also releasing a video every day on my YouTube channel, Simon Dixon. So head over there and subscribe. You'll get the notifications. And finally, if you are a creditor of Celsius and you would like to be involved in these different recovery plans and get notifications, then head over to banktothefuture.com/Celsius. Disclose whether you're a shareholder, whether you're a token holder, whether you're a depositor, whether you've borrowed, and have your say, and we'll keep you up to date.
All right, Simon, we really appreciate you coming on the show. Thanks for visiting the market update and helping Token Metrics customers and Token Metrics viewers. Sir, we wish you the best in your quest to not only get your money back, but make crypto a better place. Thank you.
Awesome. Thanks for having me. Bye-bye.
Take care. All right. So that was Celsius, or that was the Celsius update. Let's see what we got going on in the comments. Right, Ali, as usual, first on the stream. Thank you. Aiken is here. We hope you enjoyed that. Feel free to comment if you did or did not. We have Texas and Toronto here, right? We have Maryland, Spain checking in, Portugal. All right. Hopefully all the Celsius deposit holders, hopefully that gave you at least some consolation as to what positive outcomes might be. You know, we have Idaho, Iowa City, Los Angeles, right? Right. We have Germany here with fingers crossed, right? Renee Marie says you scored getting Simon on the show. Hats off to the Token Metrics business development team for making that happen. Okay. Tony C says bear market rally is done. Let's go back to the dump fest. All right. East Tennessee is here. Welcome. Right. Please bring the market update on. All right. Well, we are going to get that right now. Western Wisconsin is here, and so is Texas and Columbia. All right. So don't want to keep you waiting anymore. So let's get into your market update. Okay. So before I do that, let's just make sure I check the market before I do the market update to make sure that, you know, everything hasn't vanished since I started talking. So right now we have Ethereum coming off. This chart right here I have is stocks right at its 60-day exponential moving average. So obviously crypto is coming off, but notice with ETH, notice how it's sitting on that 60-day exponential moving average. We use that on the site a lot. Okay, a lot. So let's go into your market update, which is going to be a combination of like what's happening, right? And what we think is next if the market goes up. Okay. So this title is Buy Breakouts Part 2. So let's call this Advanced Breakout Analysis. Okay, the Token Metrics market indicator has turned bullish. So I know part of you are like, well, you know, no shit, it's already up, right? But this was the same look as in July of last year when I'm spinning the mouse, right? So you had a bottom in June, right? You had despair in July, okay? And then once it started a rally, you got a pause, and then it kept going, Okay. So if this is what I think it is, right, which is a big rally out until the end of September. In other words, right now, it looks like Rectember is not going to happen because of the flip, not only in the GAN work, but a lot of our other AI work. So let's think about how to think about this. If we have a signal on any of our visual trends work and it goes green, you should get one dip or a little bit of sideways and then it should go. If you get a situation where it pops and then rolls over, that is no bueno. So we are back to beware the failed rally, right? Sideways, okay. Up, down, hard, no good, okay? Because a lot of times when you build, this is a momentum system. So when you get the momentum, you got to keep it, even if it dips a little, right? So this makes me optimistic that this rally has legs. I know the trading community is probably looking to sell, right? They may even be looking to get short. I get that, but don't feed the bull, right? In other words, everyone who's like, okay, I bought ETH at 1,000, I'm selling it at 1,600, I made a ton of money, now I want to get short. Okay, well, you made a lot of money, that's good. But I don't know about getting short here, particularly with Bitcoin at 24. Because when I listen to that Celsius presentation, yeah, people might get their money back and immediately sell it into the market, but I don't know that that's going to happen until later on. So, if a bunch of supply is going to hit the market, it may not be in the near term. Now, total crypto market cap had the pi cycle bottom yesterday. So you had two different signals saying, oh, wow, total crypto market cap is trying to bottom. All right. Now, again, you want to watch the failed rally. All right. Now, Bitcoin dominance. So I was very surprised to see Mr. Dixon basically talk like a Bitcoin maximalist. It's very interesting to me that altcoins have led this rally. Now, we are still in a Fed tightening environment. People are assuming everything that happens in July and September is priced in. I get it. Okay. But there's also probably going to be an issue in the fall, like October, November. And every time he said Bitcoin is sound money, I thought about this chart, right? I'm like, oh, Bitcoin is sound money. Oh, well, he didn't know that I had a Bitcoin dominance chart, right? That shows, if it's above 44, right, it could go to 52. Now, Daniel is saying, don't cherry pick 2021 to justify a bull market. Okay, this is a good point, right? I'm bringing up 2021 to simplify an overall pattern that essentially when you have like an equinox, a solstice, or in English, a change in season, right? We've noticed that whatever the market does, say it'll start in the spring, it'll rally into the summer, and then it may wind up declining into the fall. So whatever the market does into a change of season can be reversed seemingly next season. Now, rather than go through all that, right, because that's complicated, there's a lot of charts involved, I just used the 2021 example. So I used it as an example, not necessarily a cherry pick. I actually got the information about the solstices and the change of seasons from basically the smartest guy I know in the market. Now, back to Bitcoin dominance, right? If Bitcoin dominance is above 44, there's a downward sloping wedge. So you could wake up one day, especially if there's a catalyst, say from Celsius, where people have decided to keep their Bitcoin in a new reorganized entity, that could eliminate the fear of mass liquidation. Okay, Ethereum has got a bullish signal in it, right? Again, like July of last year. Now, in this case, the question is, will ETH act like it did last year? So before, with Bitcoin and the total market cap, I'm like, yeah, it probably is going to, but it's going to need cooperation from ETH. Now, it's okay if ETH goes green and sits and then goes, right? Because that's the way ETH has worked on the upside and the downside. You know, there have been a couple false signals in ETH, but normally ETH, you get the signal, it sits and then goes. Okay, let's go to DeMark on ETH. 1706 is resistance, okay? So, you know, ETH to me seems pretty stretched out. Now, ETH underperformed Bitcoin on the way down, which means ETH got hammered worse than the rest of the market. So, okay, I get it if you think 1706 is resistance. If it takes out that, it goes to 2400. Honestly, prefer Bitcoin here, right? Unless the world is about to drop $1 billion in Bitcoin on the market, you have a confirmed DeMark 13 and 9 bottom here. We talked about this yesterday. You know, Bitcoin above 22 could imply Bitcoin at either 36 or 41. Now you're like, Bill, that's insane. I'm like, okay, well, maybe, right? But it was insane to say sell in May and go away, and there's something out there and it ain't no man, and men behaving badly, right? Now it's really he who hesitates is lost, right? You hesitate on this. You go back a year and said, yeah, when Bitcoin was at 65K, you were kicking yourself for not buying it at 20 something. Okay, well, now it's at 20 something, and we may be entering a bullish seasonal organ period. So how high can it go? I don't know. Do you want to underestimate what can happen if, say, Ray Dalio comes in? Because I think this is the next big crypto buyer, by the way. You know, this guy has made so much money trading, right? His funds are up so much that, and he's betting his next bet is corporate bankruptcies, right? He thinks rates are going back to zero. I'm like, well, dude, if you think the legacy world's going to fall apart and rates are going to zero, yeah, that could take stocks down. That could take Bitcoin down. But I mean, you heard what Mr. Dixon said. Bitcoin is sound money. Sounds good to me. Okay, let's talk about what happens if this rally is short-lived. Back in 2014, this is a complex chart. The blue lines are, you know, a fractal from 2014. Why 2014? Well, that was the last time Bitcoin was down only. Okay. So in that market, you had Bitcoin go down, and then Bitcoin turned around, and from the low of the climax to the high of the squeeze over just 2 weeks, it was an 80% rally in Bitcoin. Just took 2 weeks. So yeah, I may be looking at a positive rally for the rest of the summer and possibly no Rectember, but don't think they can't do this in a week, because they can, right? All right, let's go back to ETH. We're looking at the 60-day exponential moving averages. Why? Because our quant department did a whole bunch of math saying that's a really important moving average, and I like it because it's, you know, outside the box of what people normally look at. So right now you have ETH kind of sitting near that 60-day exponential moving average. I think it's probably near 1,500 right now. So if ETH kind of bounces on top of that 1,500 or on top of that 60-day moving average, the next moving average I think that matters is the 200-day exponential moving average, which is at 2,200. So I think the other adage that comes to mind, I'm throwing out a bunch of adages, is don't short the quiet market, right? In other words, you know, if you get the failed rally, that's not a quiet market. That's, you know, a reversal. But if you get this up and sit price action, don't short the quiet market. Okay. Okay. So we've covered Bitcoin as a repeat of the July bottom, and no one liked it. Okay. Now, again, you have the pi cycle bottom in Bitcoin basically at the low, right? So again, really interesting, because the 2021 bottom, when it actually went, Bitcoin was up only. Like there's like 8 or 9 days in a row up. Now I realize we're in a different macro environment, but again, do you want the euro? Do you want the yen? And even if you don't believe any of this, right? Okay, so you're like, okay, Bill, this is all bullshit. All right, let's do it this way. If you're a long-only player, particularly in the United States, when are you going to make money in crypto? Like this was something I was talking about in February and March of this year. It's like, if you're going to make money in crypto, you better make money now. Because when the bad man comes back, whatever that is, whether it's Putin, the stock market, right? People are going to ignore July earnings being bad, but I don't know if they're going to ignore it in October. You got to make money now. So if you're going to take your shot, take it, right? Again, you got a 13 bottom on Bitcoin weekly with resistance at 41K. Now, let's go to sector themes. The question is, can you speculate in altcoins? Can you speculate? And if you were going to speculate, where would you do it? Okay, as you know on the show, I have talked about the fact that I like art. Art and stocks are not correlated. So even though the crypto market has a unique way of effing itself, even though retail is wrecked, it would be sort of both interesting and twisted if somehow the NFT market, led by institutions and crypto hedge funds, came back. Now, why would crypto hedge funds come back into NFTs? Well, think about it. They pulled their money off exchanges, and with the way this market traded, they must have missed a good chunk of the rally. So they're underperforming, right? So they got hammered on the way down, Luna, Celsius, whatever. They got flat, pulled their money into custody. Now they got to come back in and buy something. Now, they probably don't want to, but if the market keeps going up, they have to. And they may park money in art. And I was wondering, all right, so I'm not an art expert. We've done some videos on art. We have a deep dive on other deeds, right? And we've also done, sort of a hidden gems deep dive on crypto art itself. But what about NFT infrastructure, right? So this is Engine, right? There's resistance at 63. So you wouldn't buy at 63. But what I do notice is if Engine breaks 63, the next two resistance points are 78 and $1.15. And the way we're doing this is I'm going to Token Metrics' site and I'm saying to myself, all right, what did ETH do? ETH took out a resistance point at 1208, and then it took out 1, 2, 3 points. It took out 1356, 1408, and 15 something. Right? So what happens if Engine, right, if 63 cents is the equivalent of ETH at 1,000, what happens if these things do what ETH does and they take out 1, 2, 3 resistance points? Now, it's an altcoin. I'm expecting a better Bitcoin market. But again, look at LooksRare. In the top right corner, the token metrics grade for LooksRare is mooning to 80, right? When the price isn't doing much. I mean, this is just mostly unwound a dramatic give up trade from like early July. So LooksRare, if it gets above 46 cents, two resistance points are at $1.31. And if there was ever, I told our private group this morning, if there was ever a time to take a couple days off from work and get on Token Metrics, I mean, people, Token Metrics was built for a market like this. Because if this market gives off buy signals and then just sits, right, the next round is when you want to be on our indices. You can set up Telegram alerts for when any of these indicators go green. And of course, you can go through our ratings page and see what Token Metrics grades are above 80. And if the grades are moving before the price does, that's where interesting opportunities lie. Okay, I believe this is Decentraland. Again, above $1.10, you could be looking at $1.30. Polkadot. Let's talk about Polkadot. Okay. let's talk a lot about Polkadot. Did you know that Polkadot has got the second highest correlation to Bitcoin? So if you go to Bitcoin and you say, give me the top 2 correlated coins, you're going to get wrapped Bitcoin and Polkadot in terms of like highly correlated big caps. So here's a little fact about Polkadot. It's trading at 7. No one wants it. Like everyone wanted it a year ago. It's come back down to where it was in October, way back. And now no one wants to talk about it. Everyone's talking about Web3, right? And then for Polkadot, there's no resistance until 10, according to our system. And above 10, the next resistance is at 15. And interestingly, Kusama showed up in our indices today. So Web3 and connectivity, layer 0-ish, I don't know. If Bitcoin goes, Polkadot's going with it. Right now, back to like the NFT infrastructure thing, Illuvium, right? I mean, Illuvium's at 133, and the next resistance points are 153 and 323. Those are just statements, right? That's where resistance is. So if you're like, all right, well, what am I going to do? Well, you can buy Bitcoin and DOT. I think that's going to work out. Not investment advice, okay? You get all stopped out tomorrow. I know trading guys are getting bearish. But what happens if there's another leg, right? Another leg. Like normally when you get these markets, the stuff that's really not that good rallies first. So it was like Sushi, Uniswap, stuff like that. Matic, right? Now what's next? Well, maybe it's Kusama, Sandbox, right? The whole NFT metaverse complex. Yield Guild Games, YGG was moving on big volume, and I found that on Token Metrics. Now, Cardano, I know everyone likes a Cardano update. Unfortunately, there's a lot of resistance in Cardano between 44 cents and 67 cents. Now, the good news is Cardano went above 49, came back and retested it and went higher. So that's good. But, you know, Cardano does have a lot of work to do. Now, this is DeFi Perp. So this is the DeFi world. DeFi went from 2,500 to 3,400 as a group. To me, this seems overdone, right? So it's almost like long Bitcoin, long DOT, long NFTs somehow, right? And moving out of stuff like this. This is a thought, not investment advice, right? Okay, again, concluding with this whole idea about what happens if the market takes out 2 or 3 resistance points, right? You got to look this up for your coin. So sometimes people ask about Elrond, right? Elrond is at 60. Elrond takes out 2 resistance points. It puts Elrond at 80, right? And again, we're trying to, in research, you get paid for imagination. So everyone's like, okay, well, maybe it's going to dump. All right, maybe it does dump. But what if it doesn't? What if it doesn't, right? You want to be on Token Metrics following some of the grades, all right? And that is the market update, okay? Now, let's check where the actual market is, just to make sure I'm not leading you down the road to ruin, okay? So ETH is basically giving up all the gains it made today. So here we are on the Bitcoin 4-hour chart. Okay. So you've got a 9 signal near resistance at 24. Now the key is with Bitcoin is when you get this 9 signal, does it create a top? Or does it create a temporary counter trend move, which it's doing now? And then if the counter trend move, right, brings buyers into the market, you could have a more extended uptrend going 1 through 13. Okay. Now, ETH, where, you know, again, there may be some froth, but then again, maybe not. So if you look at the 4-hour chart, ETH is already blasted through any resistance from the 13 top That's probably around 1575. So yeah, ETH could come off. I get it, right? And there's probably people who want to get short here. I get that. But listen, if you're wrong about that, if you short the quiet market and this thing winds up at 1815, you're going to be really upset. You're going to be even more upset if it goes to 2400 if you fight this. So we're going to see, like, it's not a bull market until you can come in and buy the dip. All right. So let's see. Let's stop the screaming. So somebody is asking, all right, does Token Metrics have NFT analysis? Well, funny you mentioned that. Yes, we have 2 NFT analysts, right? We're going to be coming out in the future with actually an NFT grade. So like the way we grade tokens using AI, we're going to have something similar, right, for NFTs. Okay. Art is not dead. I'm dying on that hill. That's it. Okay. I'm absolutely dying on that hill. Now, a lot of people talking about Phantom. So let's get on Token Metrics. Let's just flat out, let's start rocking Token Metrics, right? So just before I get into Phantom, so Kusama showed up as a strong buy. Really interesting that Kusama just got the buy signal today. It's the first signal in Kusama since April when the sell signal came in, right? And one thing you'll notice is that in Kusama, the Token Metrics grade is mooning and the price really hasn't gone anywhere yet, right? So you're looking for these instances where price moves. Now, how do you find those instances? Well, now that our overall market indicator is bullish, right? Our indices are going to start populating with the best momentum trades. So ETH is a momentum trade, but Kusama is also in there and could become a momentum trade. So if you're sitting there going, all right, well, I got 60 days to make money in crypto, right? You know, KuCoin wants to buy Binance Coin and UFO Gaming. Again, seeing this metaverse theme all over the place, right? So you also want to be on ratings, okay? So, I mean, look at the number of coins that have got, like, the rankings are over 80, but a lot of the trading signals haven't turned up yet, right? A lot of these visual, and you can set up Telegram alerts to say, all right, when something that I'm looking at goes bullish, you know, like you know, is that the time to jump in, particularly if you get the bullish signal and you don't get the failed rally? I know that's a little complicated, right? You don't want to see the bullish signal up and then crash. You don't want that, obviously, right? But if you get, you know, up, retrace, sit, slump a little, up, slump a little, that's bullish price action, right? Loving Life, Thorchain with an 85% rating, right? Loving Thorchain and Zcash as my personal pet project, you know, ideas, not investment advice, right? At all. Not investment advice. Okay. So one thing we also want to look at is we want to keep an eye on the Token Metrics markets page, right? So one of the things that I think is really interesting, right? And this is where people are going to tell me that the market's overbought. I'm like, dude, it's not. Like 9% of big cap coins are above their 60-day exponential moving average. Now, it probably takes 1 or 2 big up days to change this from 9 to 60, but the market is not overdone, right? It's still in the process of mean reverting. Now, I don't know. Do you want to chase the 1 or 2 last updates? Okay. Maybe if it's a 1-week rally, maybe you don't. But this is not a 1-week rally, and you scoff at 23K Bitcoin, and it winds up at 41, and everybody calling for 100, you know, you're not going to like yourself, right? You're absolutely not going to like yourself. And I really think that it's time to start looking at sector analysis. So not only do we grade sectors, right? Not only do we grade coins, but we grade sectors. Now, let's just, for fun, before I get to Phantom, let's just go to DYDX. You know, this is something that both the site and I caught early, thankfully, right? Like, again, DYDX, look at this grade moon. Like, just the grade is mooning hard, and the coin, you know, hasn't done anything, at least relative to, you know, what it could do, right? I mean, somewhere the future of derivatives, somewhere the future of trading is going to happen. I mean, I'm looking at this and I'm trying to find, I'm trying to find where resistance is in DYDX. I mean, it went to $1.48. I mean, can this go to 4? Right? Is that possible that it could go to 4? I don't know. All right, let's go to Phantom. Okay, so Phantom has got a good look to it. The token metrics grade is mooning. Okay. The grade is at 83%. And then let's go to our version of TA. Okay, so you've got the green signal here. You know, like I said, when there are false signals like there were here and here, you know pretty quick, right? If it's a failed rally, the machine turns itself around quick. Now, when you look at support and resistance in Phantom, right, this becomes the kind of the tricky part. So the token metrics grade is jumping up. And the question is, you know, what does the support and resistance picture look like? Well, it just so happened that there was this huge kind of calamity around 31 cents. This was essentially untradeable. And the next set of resistances is up here between 38 and 48. By the way, speaking of capitulation, I just thought this Bloomberg article was interesting. I'm going to actually digress to some news because I fully forgot about it. So Bloomberg is reporting full capitulation could mean opportunity knocking. There's deep negativity over the economy, right? And fund managers currently favor bonds, right? It's very unusual for big fund managers to be overweight bonds relative to equities. So everyone's giving up on risk assets. And if they're giving up on stocks, can you imagine what they must think of crypto? Right? And when everybody gives up, folks, that's the end. Like that's the end of the down move. Okay, let me see if I can pull up news. And we can go through some of that because I know that matters because you know what? There is some FUD in here that I do want to cover. I know it's the end of the stream, and God bless anybody who's been staying on here, right? But I want to go through this part. Okay. So Polygon is launching a new solution, potentially reducing costs on Ethereum. Okay. The holy grail of Web3 would have...
You're not sharing the right screen.
Got it. All right. I'm shared screen coming up here. Okay. The holy grail of Web3 infrastructure would have 3 major properties: scalability, security, and Ethereum compatibility. So, yeah, Matic is already up a lot. I don't know about the tokenomics of the Matic ecosystem because, again, it's already up a lot. But it's interesting that these guys would have news coming out right as the whole thing could be turning. Okay, I remember Matic mooning and having that be associated with a positive crypto market the last time, the last rally we had. Okay. Ethereum devs confirmed the perpetual date for the merge as September 19th. So that may be your September top. Who knows what happens when all that ETH comes out of staking. Now, here is class. This is why I don't want to be short, right? Like the guy that hated the market all the way down. So check this out. Lunatic Mike Novogratz says crypto industry looks like a bunch of idiots. Greed, ignorance, and insane risk management have caused the crypto crash. The executive blamed Three Arrows Capital for much of the industry struggles. Okay, so we talked about men behaving badly, but look how they laid out this article. Remember, don't trade off the newspaper. Fade the media. So here we are, Mike Novogratz, crypto industry. There's the famous tattoo. So they're giving Mike a hard time about the tattoo, right? Here's the tattoo again, right? Right? They keep nailing him about the tattoo, right? And when people act like this, when people think, oh yeah, let's make fun of people, or oh gee, they caught the guys from 3 Arrows at the airport. I always get this impression that kind of action, I don't know. It's like when the media is like, oh, Bitcoin recovered, Bitcoin to 65K next, that's when you get out, right? That's when you get out. All right. Somebody's asking about Solana. Okay. So let's take a look at Solana. Somebody out there is looking to smash the like button. I appreciate that. Okay. Somebody wants to see Zcash levels. Okay. I'll try to get that going up there. Okay. So we're looking at Solana. Okay. So the question is, the 60-day moving average in Solana is at 43. And is it going to hold? Okay, guys want to short it. And it may be a short. It may be. Maybe altcoins have done their thing and it's time to switch to Bitcoin. Right? It's time to switch to Bitcoin. Okay. Then I can go over here and bring up token metrics, and maybe we can take a look. Hopefully the functionality is working okay. Let's see what we got for Zcash. Okay, so it is a bit of a bummer, right? Zcash is not bullish on the visual trends indicator, which kind of sucks, right? I like this conceptually, but I have to be intellectually honest about trading signals. Okay, let's go to the TA here. Okay, so this is what I'm trying to tell people in Zcash, right? I mean, if you took out, like Zcash is coming off a low at 61, right? If you took out two resistance levels in Zcash, you'd go through 82 and 100. Now, your downside is a risk below 61. It's currently at 65, and your upside is possibly 100. I think Zcash could follow Bitcoin. Now, again, we need the signals. I'm not getting dogmatic or shilling, but I'm just saying this is something that I'm looking at. Like, if it's going to go up, if I'm going to make the up bet, I want to say, all right, what can take out multiple resistance levels? Daniel is asking, have I collaborated with Ben Cowen yet? It would be great to have me on the same show. Well, feel free to get on Ben's Twitter and suggest it. I would love to do it. He was asking in the bear market for anybody with a different perspective. I'm doing a TA show every Thursday night with Crypto Keeper. So we'll keep you posted on that. You know, I would love to hang with the big guys. I would, right? We have somebody with a name that says 8K ETH. Okay. So he says ETH 8K. All right. Now, oh yeah, Quant. So let's go back over here. Let me get back into token metrics. So I know we're doing the extended stream today. So there were a lot of people searching the internet for Quant. Okay. Right. So a lot of people are searching. So people are just kind of like picking up on this now. Right. They're picking up on the fact that, oh, you know, hey, QNT is up a lot. Oh, hey, Uniswap is up a lot. Okay. So QNT has actually been going up for a while. The daily and the weekly grade are above 80, right? As you can see, the grade mooned, right? As price was mooning, but the grade is staying there. It's staying there. Now, to state the obvious, I mean, people, a token metric subscription can pay for itself in 2 months. It can pay for itself in 2 days if you get the right coin. Okay. So, I mean, with QNT, you do have resistance at 107. I think the big lesson of QNT is that when you took out 88, right? Let me just get all the resistance up here. You know, when you took out some of the levels, right? You just basically took out more levels, right? So here's 88. And when you took that out, it basically went straight to 107. So you're looking for things where, you know, once you break it, you got room. You got room. Okay. So, I mean, people, I always say in technical analysis, the best trades, okay, are the ones that people cannot see. All right. So let's sum it up. Celsius depositors are probably going to wind up with a substantial haircut on their money. They may wind up with equity in the new company. There are going to be competing proposals. So Celsius management will say one thing. Big Celsius depositors and equity holders will basically battle that out in bankruptcy court. Now, if people can pull money out of Celsius, they may panic and dump it into the market. But I don't think that's a today, tomorrow, or next week phenomenon. They also may be incentivized if they're going to build any new company around Bitcoin to hold some collateral and hold their money at the new reorganized Celsius. So I don't know if the Celsius bankruptcy, right, is necessarily a calamity for the market right now. In the meantime, momentum signals are bullish. Total crypto market cap has the pie bottom, right? And Bitcoin and Polkadot are very underrated. I don't know why everybody is buying speculative altcoins in a tightening cycle. I mean, I get it. They were oversold, but I think the next big trade is either somewhere in the NFT space, if I can find where that is, or it's in Bitcoin and Polkadot, right? It's in Web3 and sound money. All right, folks. So that was the extended deluxe spectacular market update. I want to extend appreciation to viewers. Thank you for watching. Please smash the like button. Okay, we got to eat. Also, for Token Metrics customers, I want to say we appreciate your business. All right, and that is the market update. I'm your host, Bill Noble. I will see you tomorrow.